The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very good morning to Squawk Box. It's Monday morning. We've got Carolyn Roth joining us now. Lovely to see Carolyn and Charlotte in the not so cold Paris, but my goodness me, the headlines out of Paris are extraordinary. These are all your headlines. So once again, disappointing but fairly obvious data, I would suggest, data out of China, sending stocks lower whilst bond yields hit new record lows, doing it on a daily basis, isn't it? Renewing pressure on Beijing to boost domestic demand as its stimulus impact fades or fails to get going, really. South Korean President Yoon Suk Yeol is impeached after plunging the country into political turmoil over his short-lived martial law attempt last week.
Moody's slashes France's credit rating in a blow to new Prime Minister François Bayrou, who pledges to reach compromise in a divided parliament.
Si je peux.
If I may, in my turn, I will try to serve this necessary reconciliation, and I believe that this is the only possible path to success.
German Chancellor Olaf Scholz braces for today's no-confidence vote as the country looks set to go to the polls in late February.
Very good morning to all of you. Good morning to you, Karen. Lovely to see you this week. How are you?
I'm wonderful. I thought I'd come over for some Christmas shopping.
Yes. Hang on. So the German who has the wealth of German Christmas markets, who lives in Switzerland, they also have Christmas markets in Zurich as well. You've come to London for Christmas cheer?
Well, there's the strong currency, right? The strong Swissy. I come here.
There's strong pound as well. We're certain. Well, versus the euro, everything's
on a relative basis.
Hey, look, I thought there was something very interesting about the headlines. And I only just realised what it was. And I suddenly looked at them again. Chinese data, negative. SK impeachment out of South Korea, not the best news as well. Moody's downgrade France. Yeah, I mean, come on, we expected something the same, didn't we really? And Scholz no confidence vote. Not one headline on the United States, and that is so rare. How many times this year have we had in the 250 working days that we have or whatever, have we had no Trump or no S&P or no AI or no Nvidia headlines? And the answer is not very many times as well. And yet it's an extraordinary time. The US markets, once again, stunningly outperforming. We have payroll this week. We have retail sales this week. We have personal income and spending. Big week in the States again. And we've got the most exciting thing, which is the SEP. And I know you love a dot plot.
I do. That's on Thursday. But also, yes, we could have done a headline on, let's say, crypto, for example. We could have done one on Bitcoin, given Trump's comments.
Yes.
We could have done one on the U.S. markets. Luckily, this late in December, we just have a lot of news flow, right? Otherwise, we
have a lot of negative news flow. And this is the irony.
Does it impact the market, though, the French stuff?
We'll
see how OATs are trading.
It has impacted the French market.
Well,
look at the
only to a minor extent.
Whoa, look at this, our first disagreement already. I love it. The French market over the last year to date is down 1.8%. The DAX year to date is up 22%. So there is a despite all the travails of Germany, there is a 24% outperformance of Germany blue chips versus France blue chips this year.
So that in itself is puzzling. I'm puzzled by it every single day. But obviously
only the German angle, not the French angle, yeah.
So the French angle, the reason I'm saying there's a limited impact, take a look at OAT Bund spreads. They're not at the levels that we saw, let's say, during the Eurozone debt crisis. We're nowhere near those levels. We can talk about it when they start trading later on. But I want to take you back to the U.S. markets because I want to show viewers what we did last week. Actually, the Dow sliding for a seventh straight day. That was the longest losing streak since 2020. So, Steve, I don't know how you feel about it, but is this fatigue setting into the market? Is it profit taking? What is it?
Absolutely not.
What is it?
The Dow is absolutely useless metrics of the broader US economy, of the broader strength in the US economy as well, of the huge amount of strength of the US consumer as well. I honestly think we should put a big cross through the Dow if we're telling our viewers what's going on here. S&P didn't move last week. It was down 0.6%, and that's despite the fact we've had a 27% rally in the S&P. I've got to be honest, I wouldn't use the Dow for toffee if it was as a barometer of how strong the US consumer is.
So what should we be looking at? The Russell?
Well, the S&P.
The S&P and the Russell.
The Nasdaq's up 30% as well. Indices that are more broad-based as well. I don't want to pick a random top sampling of US top stocks as well. I think the S&Ps are much better. And the S&P 490 and the S&P 500, both good barometers.
Yeah, true. We had some China data out.
We have, yeah. You're looking at me as if, come on, Stephen, read on. I shall. You'd have to get used to working with me, don't it? It takes a while, doesn't it? China's factories word a little louder. Really? I love that. Word a little louder in November as industrial production came in ahead of forecast. But this is the point. If we're talking about the strength of the US consumer, the weakness of the Chinese consumer is the problem. Retail sales disappointed. Domestic demand still weak, keeping the pressure on Beijing to increase stimulus efforts ahead of expected trade tariffs from the White House next year. Sam! Here's the unbelievably, I'd love you to see you, Sam. You're used to my strange ways. Sam, so here's the thing. The retail sales are weak, not because the Chinese consumer could not be saving more money. They have potloads of money. They have trillions of yuan. They just don't want to spend it. And therein lies the problem for the authorities.
Yeah, so it's not about the money, it's about the confidence, and that's where we see the deficit, Steve. So they're holding back on their spending because they're worried about their long-term income and job expectations as well. You only had to look at the property sector. We've just seen some marginal improvement on those new home prices out today. That was for the month of November, but still we're working with 17-month lows. You're still hovering around minus 5.7% or so on an annualized basis for new home prices. You've got Guangzhou, for instance, down almost 10%, places like Shenzhen down 7%. The only place we're actually seeing some improvement as far as new home prices is actually Shanghai, which is the commercial capital. But China is a very big country, and these tier one cities only tell part of the story. And so that all feeds into it, really, the consumption picture. And it's interesting because this even comes despite the fact that we've seen consumption schemes like trade-in programs where you can trade in your old microwave for a new one. But who goes out and buys a new microwave every year? And so there is some expectation that these sorts of consumption schemes and programs are actually going to be expanded and rolled out to cover sort of broader range of products potentially next year. So that should be encouraging. But as you say, a very mixed bag of data today. Uneven recovery, which continues to build the case and keeping very much these hopes alive for more stimulus. The big question is, when is it going to come? The thinking here, as far as economists that I've spoken to today and throughout the course of the week since we've got this change in language, is that monetary policy will probably tie us over for the next 2 months in what's sort of called a political vacuum or a sort of domestic policy dead zone, where we're going to have Chinese New Year and then we sort of have to wait for the annual meeting of Parliament in March to get any sort of hard facts and figures. So that's going to be the case for the markets to have to deal with. But in the meantime, the PBOC has said that it has more room for a triple R cut. So that seems to be somewhat encouraging. Send things back to you.
Superb, yeah. You've got to be thinking about microwave ovens. And it's one of the greatest cases of deflation. Do you know, Caro, you won't remember the 80s. Thanks, Sam. You had me on all kinds of things there. Do you know, an average microwave oven when they first came out, I remember full well, my parents buying one, they were about £400 to £450, probably about the same in dollars in the 80s. $450. You can pick up a really good microwave now in the US for about $80.
Well, all I can think about is the air fryer.
Oh, I know.
It's all the rage. Popular. I don't have one yet. Maybe I should.
Oh, you haven't? Oh, no, they're amazing. Especially for the kids' meals, when you're trying to do the grown-up meal separately and you've got to do 2 lots of cooking because they won't eat what you're eating. I know, I'm a bad parent. They've put in the prompt here, microwave ovens chat. Let's ask Frederick Neumann, Chief Asia Economist at HSBC, about microwave ovens. Are you an air fryer man, Frederick?
Well, to be honest, I don't really cook, but I think I would choose the air fryer over the microwave oven. But $80, that's intriguing what you're telling me. I didn't know microwaves were that cheap these days.
Oh, my goodness me. Yeah, don't get me wrong. You can spend 400 quid if you want to, but yeah, you can get them very cheap. It's one of the great cases of technological deflation of all time as well. And as far as air fryers are concerned, they're coming down all the time. Anyway, enough of that. Frederick, you're not here to talk about air fryers unless you want to. What about the Chinese consumer? Sam laid it on a plate for us as well. As far as I can see, they have the money, but as Sam said, they just don't feel confident enough to spend it.
They're stuffing it all away. And you said factories are louder in China of the past month, but deafening silence from consumers. So they're still holding back. And of course, they're saving a lot of money. It's going in the bank. It's not being turned around. And it will take a while for consumers to come back. Blame in part the property market. It's still a massive headwind for consumer confidence among everything else you're seeing. And that's a tall hill to climb over the next few months for Chinese policymakers.
Frederick, we all know the silver bullet essentially is fiscal stimulus. We saw little bits, pieces, some here and there, but when's the big bang coming? Equally in your notes, you say China faces a tough road ahead. There are no easy stimulus solutions. So are we not going to get the big bang?
It looks like it's going to be incremental because you know what? It's very tricky to actually find that golden key that unlocks the consumer. There's so many headwinds and cross currents when it comes to the Chinese economy. Just throwing a big pile of money at trade-in programs or spending vouchers. Yes, that might give you a sugar high in the short term, but it won't necessarily revive consumer spending over the medium term. And that's why incrementalism. We need to see more by way of social security. We need to see pension reform. That takes time. And also, it's the local governments need to pay for it, and they don't have the money right now. So you need to fix that first. There is a whole laundry list of things they need to do. And you know what? I think they'll get it. They don't necessarily want that sugar high. They want a more sustainable recovery. But that means investors need to be patient here.
If investors need to be patient, Frederick, and the government will need to be patient if there's only this incremental growth stimulus coming also on the fiscal front, what does it mean in terms of growth outlook and the actual numbers? We know that China usually attaches great importance to that 5% number. Is that something they're going to be aiming for next year? Obviously, we know the market is more realistic about a 4.5% number.
Yeah, we don't have the exact number yet. Of course, we had the Central Economic Work Conference, but we don't know exactly what they're targeting. We think actually there might be slower growth coming in next year, and the Chinese authorities might recognize this and maybe give themselves a bit more wiggle room by giving us a growth range rather than that very specific target. Now, we might come in actually at slower growth next year than we have this year. 4.5% seems a reasonable number for next year. Of course, unless that bazooka is coming, but you know, we've been sitting in waiting for the bazooka, and it doesn't look like it's going to be one. It's that water pistol that's being, used all the time, and maybe incrementally it helps, but it's not going to be that huge surge in spending that you're going to unleash. And so 4.5% seems most likely at this point in time for 2025.
Frederick, it's an impossible task trying to read the relationship between incoming Trump and current President Xi in China. But what's your best guess on how that relationship and how the US-China relationship evolves next year?
Well, you could say everything is headed towards friction, and I think expectations are very low. We got trade tensions, we got other tensions. On the other hand, remember last time they met over a nice chocolate cake at Mar-a-Lago when it kicked things off. And I wouldn't be surprised if we actually see a bit of outreach here, at least at the very beginning. You already had reportedly the invitation to Xi Jinping to join the inauguration, maybe from both sides. We might actually see a bit more outreach, at least in initial phases, until that music really starts, maybe by the summer when we see the first tariffs come through. But actually, expectations so low, it's almost just easy to beat them at this point.
Frederick, final question here for me. I know you're an economist, but let me ask you in terms of investor positioning, specifically foreign investor positioning in China. Obviously, we've seen a whipsaw year of trading with big highs September, then October we saw a bit of a sell-off, and now we're pretty much flat on the year. What do you see in terms of positioning here and confidence when it comes to the Chinese markets?
Look, it's still very, very light. But actually, what's interesting that sort of theme, I don't want to own China at any price, and like get me out of China. I think that has receded a little bit. Actually, we're not at sort of peak bearishness when it comes to China. We see, people are starting to say, well, actually, the tone has changed. Maybe valuations are very attractive. So I would say, compared to, say, a year ago, when really people didn't want to really talk about China, there's a bit of interest at the margin. It's not a huge rush, but people need to keep an open mind here, and I think that's the right view.
We've had a message from Delia Smith, Frederick, and it says, by the way, people who use air fryers and microwave ovens, you can't really call them cooks. So they're designed exactly for people like you that don't cook. Anyway, Frederick, thank you very much indeed for joining us. Lovely to see you. If I don't see you again more this year, have a happy holiday period and enjoy Hamburg, and we'll see you again soon, no doubt. Frederick Neumann, who is Chief Asia Economist at HSBC. I cooked this weekend.
You did?
Yeah.
With the air fryer?
No, that's no.
I
made a quiche. Real Men Do Eat Quiche. As a book, by the way. Or Don't Eat Quiche is a book. And I baked as well.
Well, good for you.
Yeah.
Wow.
All went very well.
Now, this is on separate news, we're gearing up for a big week of central bank action with rate decisions in the US, UK, Japan, Sweden, and Norway. The Fed is all but certain to cut rates despite last week's slight rise in inflation data. Economic projections and an updated dot plot will be in focus as expectations adjust for next year. Meantime, the Bank of England is expected to hold steady, with markets pricing only a 12% chance of a rate cut. That's according to LSEG data. Bets on a Bank of Japan hike have fallen sharply in recent days, though the yen hitting its lowest level this month after media reports the central bank would forgo a hike this month, with markets now seeing an almost 80% chance of a hold. The Norges Bank is all but certain to hold too, having previously said it would not cut this year. But in Sweden, the question is how large Thursday's cut will be, with a 2/3 chance of a 50 basis point move. A lot to look forward to.
Yeah, we need to move on from cooking, because I've just had the director in my ear. As soon as I said, yeah, I baked, he goes, yeah, I hear your muffins were a bit dry. Come on, Adam, it's Monday, give me a break. It's true, though, they were a little bit. But I'm more annoyed with the lady on the sound desk who told the director. Anyway, coming up on the show, we'll bring you the latest in the fallout of South Korean President Yoon Suk Yeol's brief imposition of martial law as lawmakers vote to impeach him. Plus, Moody's hands France a surprise downgrade amid ongoing political instability. Charlotte will have all the details. And the German Chancellor Olaf Scholz faces a confidence vote which will likely pave the way for February's snap elections. We'll speak to the deputy leader of the AfD later this hour. South Korea's parliament has impeached President Yoon Suk Yeol following his brief imposition of martial law. Yoon has now been suspended from state duties, with the Prime Minister, Han Duck-soo, serving as acting president. Well, this is a very fast-moving and complicated story, and I'm delighted to say holding our hands throughout this is Sherry, who joins us now. Sherry, talk us through this one.
Yeah, and how ironic that 8 years ago or so that we did see South Korean President Park Geun-hye impeached right before, of course, a Trump 1.0. So that is really the fate of South Korean politics ahead of any Trump administration, it seems. So yes, President Yoon Suk Yeol's impeachment motion did pass the National Assembly over the weekend. His presidential powers have been suspended. We've got an acting president, Prime Minister Han Duck-soo. His message was really all about things are okay, that really about reassuring South Korea's allies, especially the United States, holding a phone call with U.S. President Joe Biden just over the weekend as well. And for the government as well as the central bank, the Bank of Korea, were really all about stabilizing the financial markets. We did see South Korea's Deputy Prime Minister, Finance Minister, Choi Sang-mok, teasing about a comprehensive economic roadmap by the end of the year, also talking about potential incentives for foreign investments in South Korea. Makes sense given the fact that this martial law declaration and the political developments that followed definitely highlighted this so-called Korea discount, talking about how cheap South Korean assets, the stock market is, of course, due to geopolitical and domestic political situation as well. In the meantime, it really boils down to what the Constitutional Court has to say. It's not a done deal because the Constitutional Court needs to review this and rule on this. Folks at Citi, for one, are expecting a verdict around mid-March. This kind of schedule makes sense given the fact that two of the sitting justices are actually set to complete their term by mid-April, more specifically April 18th as well. So the Constitutional Court would want to pick up some steam here. They already scheduled their first hearing on this case for December 27th. Guys, it's back to you.
Thank you so much for that. Let's push on. Moody's has downgraded France's credit rating to AA3 with a stable outlook, citing political instability, while warning there is a, quote, low probability the new government will be able to tackle the country's debt. The downgrade comes a day after President Emmanuel Macron named François Bayrou as new prime minister. Charlotte has been looking at all the news flow coming out of France over the weekend, and really this Moody's downgrade, Charlotte, just underlines the challenge for the new prime minister, doesn't it?
Absolutely. Just hours after coming into office, a stark reminder there of what's at stake and the challenges ahead for him. And look, this downgrade from Moody's, that was a surprise downgrade between Friday and Saturday. And they had downgraded already the outlook back in October to negative from stable, kind of paving the way for that downgrade. And as you were saying in the introduction there, they mentioned the political fragmentation being limiting the ability of the government to tackle and take the difficult measures to potentially tackle the deficit that will be above 6% this year. And you remember the Barnier government that was in place just for 3 months. The fourth prime minister just this year would be François Bayrou, was trying to bring this deficit down to 5% by some tax increases and some spending cuts. But of course, the parliament decided to topple that government. So now the challenge for François Bayrou, a close ally of Emmanuel Macron, trying to tackle this. And in the handover ceremony on Friday, he said I was very aware of the Himalayas of difficulties ahead of him.
I know that the chances of difficulty are far greater than the chances of success. I'm well aware of the Himalayas of difficulties of all kinds that lie before us. The first is budgetary, of course, then political, and the breakdown of society where we are in.
And François Bayrou in that ceremony also said that tackling the question of the debt was a moral issue. And to give it to François Bayrou, he might be the man of the situation. Back in 2007 and 2012, he campaigned himself in the presidential election. And his top thing on his campaign manifesto was tackling the debt. And at the time in 2007, the debt was only at 60% of GDP. Now it's at 112% of GDP. And he's someone that's been campaigning on this for a very long time, even at the time when it wasn't in the headlines. So at the time people said you don't campaign on this. Well, maybe now he's the right man to try and tackle it, but we'll have to wait and see whether he can do that, because Parliament remains just as fragmented as it has been since the snap election. So he's starting to meet the different political groups, the different political parties from today to try and form his government. He will start with Marine Le Pen this morning because it's the biggest party in Parliament. He will try to see whether the centre-right, the centre-left decide to not table a vote of no confidence for him early next year when he tries to tackle himself again the 2025 budget.
Charlotte, it's great that you're in Paris, and one of the most important reasons why you're in Paris is to get a gauge of how it feels as well. Excuse me if I'm wrong here, but I don't get the impression that the French people actually want significant deficit reduction. Or am I missing the point here? They want the French state to spend more money, but they don't necessarily realise that the largesse of the state is actually going to come at a cost at some stage down the line.
And that is a very big key difficulty, as there's absolutely no appetite. There never is any appetite, I guess, in the public opinion to see spending cuts in particular. You know, they've seen queues getting longer in hospital, like we've seen in other European countries since the pandemic. Public services in general, even though they're paying high taxes, some of the public services are not as good as they used to be several years back. And so they don't want to see any of these spending cuts, even though they hear all these warnings, including some of these downgrades. But politically, it's very difficult to implement. So that is the challenge there as well. And what we heard, of course, for the opposition parties, particularly the far right, is that they keep hammering how they try to defend the people's spending power and that they absolutely refuse any tax increases. Of course, that pleases the public opinion. But the reality is, and we hear all the warnings again from the rating agencies, from the central banks, is that France needs to tackle this issue, even though it's extremely politically unpopular.
Charlotte, thank you so much for that. Now, let's stay in the Eurozone. Italy's government is rushing to finalize its budget plans before a December 31st deadline, with Rome under pressure to curb its deficit. Italy was placed under the EU's excessive deficit proceedings earlier this year after hitting a deficit of 7.2% in 2023. Parliament is due to debate the budget, which features tax cuts this week.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.